The discovery call is probably the single most important conversation you will ever have as a mortgage broker. It's the moment the client decides whether to trust you, whether to work with you, whether the case in front of you turns into an actual mortgage or just vanishes into silence 3 weeks later. Get this hour right and the rest of the case is just going to run itself. Get it wrong and it doesn't matter how much CMAT theory you've got stored in that head or how brilliant your product knowledge actually is, the client's already gone. They just haven't told you yet. And here's the honest truth almost nobody explains to the beginners at the very start of this journey. There is no such thing as a natural discovery call. Every broker that you've ever watched run one smoothly is running a structure every single time. Every single client, whether they realize it or they don't realize it. Nobody is winging this. The sooner you accept that, the faster your conversion rate is going to climb. Here's what happens to new brokers who don't take this seriously. You get a lead in, one of the very few that you might have actually got from your first few months, maybe from a referral, maybe from a piece of content that you've posted, maybe from an estate agency contact who took a punt on you. You jump on the phone, excited, half prepared, hoping to make a good impression. You ramble, you over-explain, you spend 20 minutes proving how much you know instead of actually listening to the client. You forget to ask them half the things you needed to talk to them about, and you don't set expectations for what's next. And you end the call thinking it just went great because the client, they were polite. They said thank you. 3 weeks later, there's silence. There's nothing. It's just crickets. They've gone with someone else or they've just ghosted you entirely and you have no idea why. You didn't do anything obviously wrong. You just didn't run a proper structure. And that's the cost of getting this hour wrong. It isn't visible. It isn't loud. It isn't dramatic at all. It's just quietly one more lead lost. One more day closer to month 8 when your bank balance starts screaming at you and you begin wondering if this career was a massive mistake. See, the brokers who convert leads consistently aren't smarter than you. They're not more experienced than you. They're running a structure on a call like this one. This video is going to unlock that structure for you. Now, the first thing to clear up is what a discovery call actually is, because nearly every new mortgage broker walks into their first one confused about what it is, and it costs them the case. Discovery and fact find are two different things, and they're not supposed to happen in the same conversation. If you're trying to combine them, you'll either scare the client off with an interrogation style, or you'll rush the fact find and you'll miss things that come back and bite you later on at underwriting. Discovery is the first proper call. It's a full hour, and its job isn't to gather every single piece of financial data. Its job is to work out whether the client is a good fit for you and to frame how you work as a broker to earn their trust and to end with them committing to sending you everything across so the fact find can happen. The fact find itself ideally isn't a call at all. It's a form that they should be filling in themselves. Most modern CRM systems will do this for you. And that's going to be their income, their outgoings, the deposit source, their employment history, their credit background, protection needs, all of it in a lot more detail and accurate. They will fill that in their own time and it lands in your CRM ready to review. That's the modern way. It's more accurate because the client is looking at the paperwork as they fill it in rather than trying to remember it off the top of their heads. It's faster because you're not sat on a call as well typing while they read out their payslip numbers, and it protects you at a file check because the data has come directly from them. So this model is much more simple. Discovery call is the hour where you build the relationship and you set the structure. Client portal is where they do the fact find themselves ideally afterwards. 2 separate steps, 2 completely different jobs. And if you confuse them and you make them both harder than they need to be. Now, the opening of your discovery call decides the whole tone for the hour. And this is where beginners tank themselves before the call has even started. You've been rehearsing your opening line for 20 minutes. You've been staring at your CRM and your palms are sweaty, your knees are weak and your arms are heavy. There's vomit on your sweater. It's mum's spaghetti. No, I'm only joking. But when the client gets on the call, you either launch into an over-rehearsed pitch about who you are and how great you are, or you fumble into a nervous ramble about the weather. Both send the same signal. This person doesn't know what they're doing. What you actually want in those opening 2 minutes, though, is calm, warm, and structured. Thank them for booking in. Confirm that you've got the full hour blocked out, and then give them a simple 2-line of what's about to happen. Something like, so the way this call works is we're going to spend about an hour together. I'll ask you a bit about you, what you're trying to do and why, and then we'll work out through that whether or not I'm the right broker to work with you. And if it all sounds good to you, I'll send you the next steps. If not, no pressure at all. Does that sound okay? That single opener set at the start of every discovery call you ever run, it changes the energy of the hour. The client relaxes because they know the format. You relax because you've said the things you always say. And the whole conversation lifts because it starts from a place of structure instead of anxiety. This is the difference between a professional call and a nervous one. The client can tell in the first minute which one they're on. Now, the biggest mistake beginners make on discovery calls is talking way too much. You want to prove your knowledge. You want to reassure the client that you know what you're doing, and that sounds great. You want to sound like an expert. Of course you do. So you fill the silences with information they didn't ask for and product features they don't need to hear about. Every minute you spend talking is a minute you're not learning about them. The rule for the first 20 minutes of a discovery call is really simple. Listen twice as much as you talk. You're not there to advise yet. You're there to understand. Ask open questions and let them answer fully, completely. The goal isn't to collect data. The client portal does that for you. The goal is to understand what they're actually trying to do and why. So start with the outcome, not the situation. What are you actually trying to do here? Are you trying to buy, remortgage, invest, something else? Then follow the answers where it leads. If they're a first-time buyer, ask what area, what timeline, what the deposit looks like on a rough level. If they're remortgaging, ask when the current rate ends, whether anything changed since the original mortgage took place, and what they're hoping to achieve this time round. If it's a buy-to-let, ask about the strategy, the yield, whether it's their first investment or their 10th investment. The most important question that you'll ask on any discovery call is why now? That question tells you everything. Are they moving because their partner's pregnant and that the flat is too small? Are they remortgaging because the rate is up and they're worried? Are they investing because they've had a windfall or a redundancy payout? Why is where the real advice lies, because the mortgage is the same product either way, but the conversation around it is completely different depending on what they are actually trying to solve. Now, the bit that almost every beginner skips, and it's the single biggest reason new brokers lose clients that they should have closed, is that you have to frame how you work, not just what you do. Clients need to leave the call understanding what being your client actually involves, because if they don't understand it, they can't commit to it. That means saying calmly and clearly 3 things. 1, you'll need every document in before you touch a sourcing system, because that's what proper advice looks like, not guesswork. 2 is protection is part of the process and not an afterthought, because a mortgage without protection is a liability that collapses the first time something goes wrong. And 3, there's a specific order to how you'll run the case. And if they trust the order, everything works. That paragraph delivered without apology is what turns a discovery call into a genuine commitment, because you've stopped being a broker who's begging for cases and become the advisor who's telling them how it's going to work. You'll introduce the client portal here. After this call, I'm going to send you a link to my client portal. That's where you'll fill in the fact find, your income, your outgoings, all of that kind of thing in your own time. Once you've done that and sent me the documents, I can start the research properly. And that single line sets the client up to the work between calls. So you're not stuck typing on the phone with them for another hour on a different day. Clients almost never push back, by the way, on any of this. They actually relax when they hear it, because most of them have dealt with brokers before who are disorganized, pushy, and structured. Calm is exactly what they're hoping for. The ones who push back weren't going to be good clients anyway. Better to know that now than in 3 weeks' time. Now, at some point in your first year, you'll get a client whose first question is, what rate can you get me? Now, before you've even started properly on that, that's a price shopper. And beginners lose more of these than any other kind of lead because they panic and try to compete on rate. Don't do that. You'll lose that game every single time, because there's always someone quoting a cheaper number online, always, and the client isn't in a position to know whether that quote is realistic for the situation. What you do instead is reframe the question calmly. Rate is one part of what makes a mortgage the right one for you. But honestly, truthfully, it's not the biggest part. And the biggest part is whether the lender will actually accept your case cleanly, which depends on things I won't know until I've seen your documents. What I can promise you, though, is I'll find you the right mortgage for your situation, not just the cheapest rate on a comparison site that might actually get declined at underwriting. Say that once calmly, and 1 or 2 things are going to happen. Either the client relaxes and agrees to move forward, in which case, by the way, you've won them properly, or they push back really hard, okay, and that can happen as well, and they refuse to move off the rate question, in which case, by the way, they were never going to be a client of yours, and you've just saved yourself 3 weeks of unpaid work. Either outcome, you have to reframe it in your mind, is a win. The broker who chases price shoppers into a rate war is the broker who works twice as hard for half the income, and the broker who reframes the conversation is the one who builds an actual real sustainable pipeline. Now, what you want before you end the call is a specific action, a specific deadline, and a specific reason. Something like, so here's what we'll do. As soon as I get off this call, I'm going to send you the client portal link. Take 20 minutes tonight or tomorrow to fill in that fact find, upload all your documents. Once I've got everything, I'll run the research and I'll book us in a call for later in the week to walk you through my recommendation. Does that sound good to you? Get the yes, book the follow-up call there and then silence between calls is where clients drift off to competitors, and the discovery call is where you either shut that door or you leave it wide open. Now, sometimes you'll do all this right and the client still goes silent after the call. Now, that's always not your fault. Life gets in the way. They get distracted. Their partner has second thoughts. Work gets busy. But how you handle the silence is entirely on you. Beginners either chase too aggressively and scare the client off, or they don't chase at all and they lose the case to inertia. The right rhythm is somewhere between. A polite check-in the next day, a soft nudge 3 days after that, and a final no pressure. If the timing's not right, just let me know and I'll leave you to it. Message about a week in. Never desperate, never pushy, but never invisible either. Most silent clients aren't actually rejecting you. They're overwhelmed by life and they need the smallest push to kind of re-engage. Give them that and a meaningful percentage of them will come back. And the mistake new brokers make on discovery calls are almost always the same handful. Talking too much, asking too little, trying to give advice before they've actually seen any documents, skipping the frame so the client doesn't understand how you work, panicking on the rate question, and then competing on price. Ending the call without a specific next step, chasing too hard, or not at all when the client goes quiet. Every failed discovery call traces back to one of those, and every one of them is fixable the moment you stop winging it. The brokers who convert consistently aren't smarter than you. They're not more likable than you. They just have a structure, the same structure, every single call, every client. They never have to think about what to say. They only have to think about who they're saying it to. And that's the whole game. Learn the structure, run it every time, refine it as you go. And within your first 50 discovery calls, your conversion rate will be higher than half the brokers who've been doing this for a decade. Now, if you're watching this and you're starting to realize how much of good brokering is about running the process properly rather than just winging it, the natural next step is to understand how the compliance side sits on top of all of that. Because a great discovery call means nothing if the files behind it don't stand up against any file checks. And that's the next video. Mortgage broker compliance explained for beginners. What the FCA compliance actually means in plain English, consumer duty, suitability letters, checks, the vulnerable customer rules, all of those things. It's all unpacked. All of that really exciting stuff that you need to know but don't want to know. It's all on screen now. Give it a click.